With the ever-changing market and the interest rates that have just increased again here in October of 2023, one question I get a lot is, should I buy or should I rent? And to answer that question, we have to dig really deep on what is your plan and what do you want to accomplish with your money. Hi everyone, if we haven't met yet, I'm Troy Sage, local realtor, where I'm dedicated to doing real estate differently, and I am your host here on the podcast Real Estate Talk. In this episode, we have one of my favorite lenders, Nilesh, is going to break down the pros and the cons of purchasing, what it costs to rent, and what to look at in the next 12 to 14 months in regards to what could happen with interest rates. So check it out. What's happening, Nilesh? Talk to me, man. How are you doing?
Doing great, Troy. Nice to see you.
Yeah, it's good seeing you, man.
Yes.
Good times. The market is absolutely going crazy right now, at least from a realtor side. And one of the gray clouds or the questions I get a lot from buyers due to interest rates increasing and still really low inventory is, should I wait or should I buy? And I figured you were the guy to talk to about this since you're the money guy.
That's true, Troy. I get this question almost on the daily basis. And right now, what I've done is I put some numbers on the spreadsheet just to walk the client and tell them, hey, the cost of waiting is X versus if you buy now, and let the client make the decision. Our job is to inform them and let them take forward. So if I can share my screen, let me bring out my spreadsheet. So let me run through a scenario right now. If you buy currently in October of 2023, this is a down purchase price, down payment, the current interest rates are this. Well, when I was preparing this, the rates were around 7. And let's say if you wait for 12 months, you will get a better rate. But and then your monthly payment will be this much versus this much, right? So what I'm doing here, I'm showing the client, okay, your monthly payment will be lower, maybe by $100. But then you will save $100 each month if you, instead of buy now, buy down the line. But note this, instead of paying $500,000, you're going to pay $520 on the same property. And also, the other thing is you are going to rent in this time for the next 12 months. So your rent is also going to be additional $24,000. So net, after running all the numbers, the cost of waiting is going to be not positive, but a significant negative number, because you are going to rent it for next 12 months, and then the savings is about $2,200 over the next 12 months. So what I'm trying to show, Troy, here is if you are currently renting, the market which you are in has a significant advantage because the sellers are looking to get the offers. We can always ask for seller subsidy. Using that seller subsidy, you can buy down the rate, and instead of 7.25, you will get a 5.25 for the first year, and then second year goes to 6.25. So right now the buyer still has the power to negotiate with the sellers. Let me ask you one thing. Now, when the rates go down, what happened to property prices?
They always increase.
Now, knowing what you know today, 1 year down the line, would there will be more buyers or less buyers?
Well, I think we would see substantially more buyers.
What happens to the inventory? Do you see more inventory, more houses built up?
Well, not at this point in time, right? So I think we already have a slight shortage of inventory right now, especially in our starter homes, right?
Right.
But historically, what I've seen is that when interest rates come down, prices go up, a few more people put their home on the market if they have to move. But realistically, our buyers are competing again, and we start seeing what we saw the past few years. That's what I've seen.
Yeah, so all the data points, right? Let's say the inventory remains the same. There are more number of buyers and the prices are going up. You will see exactly what happened in 21 when there are 10 offers and the buyers are going crazy. They are offering over the listing price and everyone is competing for the same price. And then it becomes a seller's market at that point. So our job is to educate the clients, let them make a decision if they want to be buying now versus now. But that's what I see, Troy, in the market. That's where I educate the customers and let them make the decision from there.
Yeah, and here's what I see also is, first of all, thank you for the chart. And you were very, very conservative on the chart at $24,000 in a year for rent. That's only $2,000 a month. And I will tell you, right now in the North Dallas, Texas area, it's hard to even find a 2-bedroom apartment for $2,000 a month. So the numbers could reflect even more negative if you wait. In my opinion, the key is if you have the money to buy, and we've heard this before, and it sounds like a sales pitch, marry the house and date the interest rate.
Yep.
I don't know who came up with that tagline, but hopefully they trademarked it because it's kind of a cute line. My point being is this: is historically, in all the years I've done real estate, and when I look at the charts that go back to the 1960s, real estate's never really dropped except for during the short sale or the REO era in 2008 through 2011. And technically it only dropped for, a couple of years. Mm-hmm. More millionaires were made during what we call now a recession, because the people that actually bought homes, they banked on the long game. Yep. And even with 3% appreciation, which I don't expect to stay at 3%, but let's say 3%, in 10 years, you just made 30% on your money. And yep. I think that's where some buyers in the market right now forget. They get zero equity when they rent. Even if they have zero equity when they own, they get to use the property, update the property, create memories there, do whatever they want with the property. So buying isn't for everyone. If you have someone that's very transient, that's going to have a job relocation a year or so, might not be a good time to buy unless you have another game plan, which would be to rent the property after you get transferred. But anyone that doesn't want to maintain the property, it's not a good deal for them either, because you actually have to make sure that the house is in good shape. What I love that you just put across was how much money people will actually lose. So if they have the money to buy a home, I've never found it to be a bad deal. I've been buying real estate since I was 20 years old. So even during bad markets, there's always been a return on investment as long as I hang on to it. My question for you is this: if I have, let's say there's a young couple, right? Freshly married, no children, they're thinking about buying a home. They're looking at like a $400,000 to $500,000 home in North Dallas area, which is a pretty nice starter home. What kind of money do they need to be able to purchase? I know there's a ton of programs out there, but what are they looking at as down payment?
So that's also another question that I come across a lot with the realtors, and especially someone who is starting new and just getting into the house ownership, right? Now, based on where we are, there are multiple programs based on the income of the couple which we are talking about. If they are making an average income in the area, they may qualify for as low as 3% down payment. If they are making little bit higher, then we go up to the minimum down payment is 5%. But also there are programs where we qualify with 0% down, where the lender will pay for their closing cost as well. So it depends on the income qualifications, of course, the credit score. But that's a conversation which I would like to have. If you have made up your mind, or even if you are considering, and if the funds is in discussion, then please talk to the lender, and they will have some programs which will help you to get into the home sooner rather than waiting and gathering your funds.
I think there's a big misconception that buyers think they have to have 20, 25, 30% down. So thank you for clarifying on that, because like you said, depending on their FICO scores or debt to income ratio, there's lots of ratios. Yep. It's important that if someone's thinking about purchasing a home, just the chance of it, it's a simple phone call and it's a simple conversation with a relatively short application process. What do you pay in your monthly bills? What's your income? Are you gainfully employed? And let's see if the numbers work. If they don't work, what I've found that has been good for anyone buying a home, whether first time home buyer or investor, is get a game plan for what you want to do with your money.
Yep.
I've seen too many times where people have like a little bucket of money, like $20,000, $25,000, and they go, I can't buy a home, so I'm going to go buy a car. And then once they go buy that car, and if they finance a car especially, now their debt to income ratios get really weird, or they spend like $25,000 on a decent used car and they have no nest egg left.
See, that's why there's so much of misinformation available on the internet. It's always good to talk to a professional who has been doing this for many, many decades. And Troy, I know when you meet your clients, you always recommend the lenders which you have worked with in the past. And then it's always good to have a conversation, maybe, and sometimes you don't even have to even apply, right? It's more of a conversation, and when you are ready, then make an application. We don't need to look at your pay stubs or look at your credit score if you are not ready yet. So it requires a 30-minute conversation. Maybe after 30 minutes, you come to a decision. Let's take the next step. So the first step is called a pre-qualification. That means you qualified based on the verbal conversation, and then you take the next step when the lender will look at your documents, look at your score, and then we write a pre-approval letter saying now you are ready to buy, go to the next step. So don't take the first step, just have a conversation. And at that point also, do not rely on your friends and family. This is like when I say financial, it's like your health profile, right? We don't discuss what our health situation is with our family and friends, right? We don't know what's our blood pressure, when are we visiting doctors, and for what. Similarly, finance is it's not same across the board. Someone who is making 110 versus 120,000, there are so many programs, 5%, 3%, 20%, and there's so many things. So
yeah, so the bottom line is if somebody's thinking about buying, it's a simple phone call, and let's see if financially it makes sense, right? If it financially makes sense, why not buy? There are programs that will help people. There are lenders like you that will help people, guide them down that path. And there's different communities that they can purchase in. Not every home in North Dallas, Texas is $600,000-$700,000. They don't have to dive in to a $600,000 or $700,000 home. Realize that there are homes available in the $300,000 range. It may not be exactly in the neighborhood that you want to be in, but I think the other misconception is, especially first-time home buyers, they want to be in like the home they grew up in. I think that they forget that maybe mom and dad didn't start there, that they started with a condo or they started with a small home. So it's a simple conversation. Now, you touched on something in regards to different interest rates, and I see this with builders all the time. That builders will advertise, 4.9% interest rate, or it's always 2% below where the prime is right now.
Yeah.
Can you explain that a little bit, like how that type of program would work?
Yes. So see, this is what builders are doing. Let's say, Troy, you have a listing and you are listing a house at 600,000, right? And when you talk to your client, you would, instead of listing at 600, you would list at a 620, assuming the appraisal will come at 620, and you will give a 20% seller subsidy. What does that mean? When you're giving a seller subsidy, the buyer can buy down the rate. So instead of getting a 7%, they will get 5% for the first year, and the next year it will be 6, third year it will be 7. How are builders doing it? The builders are putting that money into the price, right? So that's how listing agents can do it too. Instead of listing your price at 600, you list it at 610, 615, and then offer that 10 or 15,000 as a seller subsidy. Now, once you get that 15,000, the buyer, first of all, you make it more attractive to the buyers, saying, hey, you will get your mortgage at 5% versus the standard which is going on right now is 7.5 to 8%. So that's how builders are doing. They offer incentives, and that's how they are using that incentive money to buy down the rate, which is called a temporary buy down. It's only for the first year. The second year it goes up by 1%. Third year it gets to the normal rate.
And then at the normal rate, it just locks in there. It's not like the old school I call variable or adjustable rate mortgages that after a certain period of time, it could fluctuate every year. This is a solid program where in the worst case scenario, the worst case situation or scenario is that they are locked in at today's rate. So if in 3 years from now, rates go to 12%, heaven forbid, they're still locked in at that 7.5 or 2.5, whatever the rate is, right?
That's correct. And realistically, 3 years from now, the rates should go down. They should not be at 7%. So you can refinance. So there's no obligation not to refinance. They can always refinance. So no one is stopping you. So if the rates go down in next 6 months, you can do a refinance. There's no problem in that. So it's a good incentive, which the listing agents can do, the builders can do. So that's what they're doing. It's called temporary buy down.
I think it's a fantastic program. And sellers, so buyers that are watching this or listening to the podcast, understand that sellers in the market today are entertaining these kind of offers. This isn't a fictional thing. It happens every single day. In resale homes, a lot of times sellers will follow what the builders are doing because the builders are the competition amongst all the other homes that are available. But they follow this. Now, they didn't follow it last year when interest rates were lower. And they definitely didn't follow it the year before. They didn't have to. Supply was so low and demand was so high, people were outbidding each other. So we're in a different world today. And again, I'm going to go back to your graph. I love the fact that what you're showing our viewers and our listeners is that you can absolutely rent. There's no sales pitch here. And that's another thing that we go, oh, you're just trying to sell me a home. You're just trying to sell me a mortgage. No, I'm trying to show you how to use your money, leverage your money to give you more money in the future and get to use the product, the home.
That's correct. Yeah. And the buyers can make a decision if they want to continue. Maybe it makes sense because they want to complete the school year of their kids in the same school division. Maybe they are not finding the house which they exactly like. Someone wants a basement, someone wants a finished basement. So maybe that's all the valid reasons. But just make this decision financially and just not based on the information or the noise which you hear in the market and what's going on. Rates, we don't control the rates. We don't control the economy. There's very little which you and I can influence the economy. That's the way. Feds are already talking about the rates to go up once more in November 11th. So they will continue doing it till they get inflation in control. But you as a buyer don't have to rent it. And rates are rates, what it is, what they are. So you don't control any of those things. We don't control prices.
And the last thing I'm going to say about rates, and this is another misconception, when people see that the Feds increase the rates, the first thing that affects is your credit cards and buying cars. It doesn't affect real estate as much as it affects the other avenues of borrowing money. So, when you go to buy a car right now, you don't see any car dealership saying zero financing. That's gone because it costs them too much money, to loan on that. And credit cards, they're averaging 23 to 29%. So as a listener or a viewer, if you're using your credit cards to buy stuff and you're worried about the interest rates, look at those interest rates first. I mean, I can't imagine paying 30% interest compounded on a credit card when you could buy a home, spend your money on a home, and even if your interest rates are 8% on something that you own that is going to increase in value. Nilesh, I love your chart, and the one other thing I want to say about you, because I have clients that have used you for your mortgage service. You provide top-notch communication and service to everyone. So I appreciate that when I refer a client to you, I know it's going to someone that's got experience and is trying to do the best for their clients. So I want to personally thank you for being that way with clients. It's just like realtors. There's so many lenders and realtors out there. It's always a blessing when we get to meet someone that works on the client's behalf. So I want to say thank you for that.
Thank you, Troy. Yes, and it was lovely talking to you as well. There are very few realtors who know the in and out, and especially you moving out, like you came from California and now you're in this market. So definitely great to know you.
I appreciate you, man. We'll have you on again. And if anybody wants to reach out to Nilesh, you have seen his information across the screen. Feel free to reach out anytime. His phone number is there. And if you're watching this on YouTube, His direct contact information is in the description. Hi, everyone. I want to thank you for listening to and watching our podcast on YouTube. If you're finding this information helpful, click like and the bell so you're alerted every time we upload another video. For those of you that know me, know that I've been helping people just like you for over 15 years buy and sell real estate. So if you have any questions about real estate or any question about what's happening with loans and the industry itself, my information and Nilesh's information is in the description below. Until next time, my friends, make it a great day.